Airbnb has finally announced that it plans to go public through an IPO in December of 2020. The darling of the startup world, currently valued at around $30 billion in the private markets, has been rumored to be considering going public for years, and the company has formally filed paperwork with the SEC. In part one of this analysis of Airbnb, we will review the history of the company, deep dive into its business model, and explore its strategy for dominance of the hospitality sector in the coming decade to better help you understand investing in this company. Airbnb is a travel technology company headquartered in San Francisco, California. Airbnb's primary offering is an online vacation rental marketplace where users can search for and book short-term lodging, and so-called hosts can put their homes or apartments up for use by these guests on the site and receive compensation. In this business model, Airbnb acts as both the marketplace and the broker for the transaction and makes a commission off of each listing, 3% of each booking from the host, for example. For a quick history lesson, the company was founded in 2007 by roommates Brian Chesky and Joey Gebbia. The story goes that the pair came up with the idea of placing an air mattress in their living room and turning that into a, quote, bed and breakfast. A friend of Chesky's named Nathan Blacharczyk joined the company as the first chief technology officer. He was the programmer of the bunch, and they created and launched the website airbedandbreakfast.com in 2008. The nascent company received its first customers during the summer of 2008 when there was an accommodation shortage during the Industrial Design Conference in San Francisco. From there, the company was accepted into Y Combinator, the prestigious startup accelerator in Silicon Valley. By March 2009, the company had 10,000 users, 2,500 listings, and shortened the name to Airbnb.com. From there, the company raised a seed round from Sequoia Capital, won a design award for the app, raised a Series A financing round, and opened the first international office in London. The company faced years of intense regulation from city governments and open war from the hotel industry, but managed to overcome both of these hurdles and become a thriving company. In the years since, Airbnb has expanded into 191 countries, has around 150 million users, and boasts almost 3 million hosts. As of November 2020, the company has raised over $4 billion in venture funding and is currently valued at just under $31 billion in the private markets. Airbnb is currently the third most valuable unicorn, a tech startup worth over $1 billion, in the US, behind only SpaceX and Stripe. However, being in the travel industry, the company is obviously vulnerable to a downturn in global travel. Yet, in spite of the unprecedented destruction of the travel industry in 2020 due to the pandemic, the company has managed to stay relatively strong. First off, as a platform, their business model inherently inoculates them to some degree against broader changes in travel. They don't have to deal with empty rooms, pay hotel workers' salaries, or be constrained by geographical differences since they are a truly global brand. A travel ban or lockdown in one country doesn't adversely affect their listings in another. Additionally, the leadership has shown an ability to make difficult decisions in the face of adversity. In spring of this year, the company announced it was laying off approximately 25% of its staff, or around 1,900 employees, and that executives would be taking a pay cut for the duration of the pandemic in an effort to shore up the company's financial standing. These cuts allowed the business to become leaner, focus in on its core business competencies, and as a result, actually managed to turn a profit in Q3 2020 of almost $250 million after losing money in the first 2 quarters of the year. Looking deeper into the travel industry in late 2020, it's easy to see the carnage industry-wide and become hesitant about investing into travel. Why will Airbnb succeed in the future? And more specifically, why will Airbnb succeed in the future and beat its competition? For starters, Airbnb has the strongest brand in the history of hospitality. No other brand commands the market share, variety of offerings, global reach, and most importantly, respect from the consumer. Before Airbnb launched, you could ask anyone if they had a favorite hotel brand, and they probably wouldn't be able to tell you one. Traditional hotels have almost no differentiation between each other, and aside from maybe the Four Seasons, which is absolutely unaffordable to the average traveler, no brand has this level of admiration from the consumer. Airbnb, however, is beloved by its users and hosts alike. Additionally, the traditional hotel brands, which are its main competition, are injured prey. They've been decimated by the travel restrictions and quarantines, have been identified as one of the main super spreader venues by numerous health authorities, and can't move into a business model similar to Airbnb to try and better compete. The traditional hotel brands just simply don't have the financial resources, technology, or even talent to make the investment into online that it would take to launch an assault on Airbnb. So far, Airbnb is looking pretty promising, but before I make my final recommendations on the company, I want to compare Airbnb's IPO to another company with a similar business model and similar hype around its IPO, which happened to not work out so well for investors: Uber. In part 2, we will compare Airbnb to Uber and examine whether Airbnb is in a stronger situation, destined to be a win for its investors, or suffer the same hurdles and fate as its ride-sharing counterpart.